I will take this opportunity to talk about a few benefits of listing for our prospective issuers who are here with us. And there's a brief presentation that I'll run, and I'm sure it will resonate with the audiences because we've tried to take and bring forth certain concerns that are there pertinent with the businesses that we have in our market. Financial needs of a business. There are various ways and reasons that a business needs finances. They need capital, whether it's working capital to run your businesses, whether it's money to diversify your businesses further, backward or forward integration, which is, especially in today's environment, there's an urgent need for businesses to look at local inputs and ingredients. Businesses are looking to integrate either forward or backward, so they have the entire supply chain. Research and development, diversification, as I said. A lot of times, businesses also look at servicing the debt or to pay off the debt with equity and offset it. Factory enhancements, increasing and managing the workforce. A lot of our businesses are looking to diversify and expand. During my meetings with prospective businesses, these are certain concerns where they want to expand their footprint into other countries or other regions. With that impetus from the government to focus on exports, this is an area that businesses are exploring. When you come to the stock exchange to list, you do give a small part of your ownership to the investors and shareholders, but it is a cost-efficient measure. It's competitive pricing, basically, without really giving out management control. Because a lot of times when you look at joint ventures or equity injections, private equity injections, at times entities give out management control as well. What's going on? Okay, there are multiple options. When you come to the stock exchange, there are multiple options that you can choose from. For larger entities, there's the main board to come and list on, where companies which have a size of about 200 million and above can opt for the main board. There are a large number of companies already listed on the main board. There are companies which are Sharia compliant. That's one of the concerns that we have from potential issuers who want to opt for a Sharia compliant company and be a listed entity that way. What you need to do to go public is to prepare your financial statements, publish them on the website. Again, today, companies do have their websites. You need to do your audited accounts. And there's one basic requirement that you have to have been in business at least for the last 3 years. And in the last preceding 2 years have been profitable. For that also, we have a flexibility now for loss-making companies as well. And there's an exemption for greenfield operation companies. Then we have the GEM board to come and list for the small, medium, and growth enterprises. So any company that is looking at reaching a size of paid-up capital of 25 million, post-issue is eligible to come and list on the GEM board. The GEM board stands for Growth Enterprise Market Board, and it is an evolving offering listing option for companies. Companies don't need to create prospectuses. They need to create an information memorandum for that, which is a watered-down version of the prospectus, where you give out basic information about your companies, about the shareholders, about your business plans, and other details. And again, for this GEM board, greenfield operations are eligible. So are loss-making companies. They can come and explore raising capital from the stock exchange. Then there's debt securities listing on the stock exchange, which is term finance certificates, which is corporate debt in terms of sukuks, as well as bonds and papers. I'll just touch upon a few benefits of listing on the exchange, which companies must keep in perspective when they are coming to the exchange. It's not just one reason that you come and list to raise capital. Capital is not the only reason. You do raise long-term working capital. You also get debt limit enhancements. Once you raise equity from the exchange, you're a listed company, your size has increased, that helps you increase your debt limits with the banks, your lines. You can then go and raise more debt also from the bank. So it is a two-way benefit, I would say. It enhances the company's public image and visibility multifold. From the day that a company decides that they have to go and get listed, they reach out to the consultants, to the issue and advisors, and give the mandate. That is the time that their publicity journey starts. The media starts looking at them, average investors, small investors, high net worth investors in the local market as well as the international market start covering and looking at those companies. So many of those companies which are not there on the radar, or they're not in the consumer goods, into the B2B sectors, for them it's a public recognition and an opportunity to have their branding visible. It also attracts HR capital. Employees prefer to work for a listed company. They believe that a listed company will help them grow their careers faster and in a more organic manner. Another aspect, the regulations for listed companies are very clear. The FX structure is very clear. So when any foreign investor wants to invest in your company and you're a listed company, they can access your company's shares through a proper SCRA, SACRA account, and foreign portfolio investment flows in. Everything that is happening seamlessly. So there's no, since 1991, the government has opened up the SACRA account, and with that, the investments into the company is seamless, and obviously the repatriation as well. Another aspect, you have improved relations with your bankers and suppliers. For the CTIs, I'm sure these are the things that you all are familiar with, but this particular presentation is for the potential issuers and the companies and the businessmen who are sitting here and thinking of a long-term plan for your particular companies. So you have a better relationship with your bankers, with your suppliers, with your import partners or export partners as well. Another aspect to keep in perspective is the capital gains tax. Now, the capital gains tax vis-a-vis withholding tax as a sale of share, it's the CGT that is applicable, which is comparatively lower. And it is applied to selling of a listed company shares. If, on the other hand, it's a private company and the shares are sold of a private company, CGT will not be applicable. The business continuity and succession planning. This is the primary and most serious concern which Pakistani businesses have. As families go into the next decade, into the next generation, if it's a listed entity, that transition is smooth. The legacy continues. A challenge which a lot of Pakistani businesses, if we look at 30 years ago or 50 years ago, there were many businesses and brands which were Pakistani-born and local brands. But over time, because the family went into the second generation, it sort of lost its presence, and a lot of businesses closed down. We saw Polka being sold off. We have these very strong brands where we have associations with. So once a company is listed, we have a proper code of corporate governance. There's a board. The family members can sit on the board and still run the company, be part of the organization. There's a professional team that's running the organization. So over generations, you look at businesses carrying on. This is the primary, I think, the most important benefit of listing your company. I'll move to the... A few added benefits. It helps improve liquidity. the financial structure becomes better because a listed entity will follow all the international rules, the IFRS standards of reporting, the audited accounts, visibility. That helps the entire financial structure improve for a listed entity vis-a-vis a non-listed entity. And that, of course, helps for the bottom lines as well. And liquidity, cash flow management gets better that way. Another aspect, the negotiation power. Now, if it's a listed entity that's visible, that's being quoted on Bloomberg and Reuters and the stock exchange, and everything is transparent, the entities that you're negotiating with or transacting with for your business needs, whether it's a buyer in the international market, or whether it's creating your LCs with the banks, you have a better negotiation power vis-a-vis a non-listed entity, which is not visible in the world. Today, everything is digitized. And when you're traceable and you have a price being quoted everywhere, you're more visible and you have a better negotiation power. And the same goes into expanding your operations. When you're looking at JVs in the international market, you're looking for partners to expand your business, your footprint in other areas. The listing aspect really helps in getting that. Another thing, governance and corporate structure. As I touched upon it, succession planning, governance, the corporatized structure adds more trust into your organization. You have better internal controls, you have strategic efficiency, and you're a corporate entity. From there on, you can also expand into other areas, create subsidiaries, have one holding company with multiple companies and subsidiaries to expand your businesses in. Brand building. This is one of the most important aspect. Companies generally spend millions on building their brands. We advertise, we run campaigns on televisions with 300 million, 500 million, $1 billion worth advertising budgets. But if you're a listed entity, you have auto visibility, and the media is looking at you, other investors are looking at you from across the continents, across the world. That makes you prominent. And that is what helps you build your brand stronger. If you're a good corporate governance institute, if as an organization you're transparent and you adhere to the compliances that are required, you're there. You want to change your perception. Another aspect which I would want to touch upon today is, I've heard from whenever I meet with prospective corporates which are looking to issue or raise capital, they have a concern that, oh, we'll have to get a board of directors, and then we need to have independent directors, and then we'll have to answer them. My take on that is that this fact of getting independent board directors should be taken up as an opportunity. Opportunity to get experts on your company at a lower cost. You hire a consultant for taxation and you pay them a consultation charges. On the flip side, if you get a taxation expert on your board, that he will guide you through that entire tenure. Your finance people, your taxation team will get unconditional support and guidance. Similarly, if you want to go into digitization or engineering. So this is an opportunity to get expertise and learn and improve yourself. So it can be taken up as a strategic growth area. Okay, I've done this. Strengthen human capital. I did touch upon the ability to attract better HR, but one more aspect is a lot of times companies want to keep employees within good employees, so they offer them share options or stock options. Stock options for unlisted companies are a challenge, because if I get a stock option from an organization, I wouldn't know the price of it at any point in time. But if it's a listed company, you can actually look at the worth of that stock on the stock market. So you were able to know what kind of stock options and what value of those stock options, or ESOPs, very well known. What is the value of that and what are you getting? So employee stock options become easier and better and more organized. Okay, a few of these are, I would say, from the GEM board perspective. Again, a lot of tech firms are also looking at coming and listing on the GEM board. When that happens, with the way the tech firms are structured, they have concerns of holding companies that are based out of the country. Some have local subsidiaries here. With the GEM board, you have a very clear financial structure for increasing the FPI or repatriation. So that's another thing. You can go global. Another area, GEM board is a very good alternative for companies to also make an exit and use that capital for other avenues or other business prospects. So for the GEM board, it's a good, these are a few benefits of the GEM board. I will not go into much detail. There are a few listing myths which I would like to talk about here, touch upon, and then the rest of the day we have our consultants to the issues and the advisors and the panel discussions which will dwell on this in much more detail. A lot of concerns are in terms of giving away the control and decision-making power. Companies think that once they get listed, they're giving away their control. They also are not very sure how their board of directors would be structured once they're a listed entity. So whether they're a listed entity or not, once they're a public company, unlisted, they have a board in place, minimum 7 directors. So that comes along with the public offering with the going public. What is the code of corporate governance? It is a way of how your boards will be structured and how they will be running and performing. What is the current dividend policy? These are the few questions that I normally encounter when we're meeting. How do I retain control of my company after an IPO? How can I restructure my company? So our responses are that the minimum that you need to give out when you list on the exchange is give out 25% for the main board and 10% for the GEM board. The remaining shareholding lies with the owners, with the primary shareholders, and it is not about losing control of your organization. And of course, restructuring, there are multiple ways of restructuring, and our advice is always to meet with the consultants and take advice. Do not go to your consultants telling them that I want to list. Sit with them, have your discussions with them, lay out your business plans, and ask them for advice how to go about it, the entire process. And if you ask the right questions, you'll get the right answers. So with this, I would conclude my briefing on the benefits of listing.